Thank you for joining us for our third Thursday Themes conversation for this month. Today, I'm pleased to be joined by Carter Neild, managing partner at OrbiMed, which is a world-class healthcare-focused investor across biopharmaceutical products, technologies, medical devices, diagnostics, and healthcare, IT, and services companies. Carter, thank you for joining us. We appreciate your time. Perhaps you could get us started and just give us a broad overview of your firm, the investment strategy, and really what theme or themes are you currently focused on?
Sounds great. Well, thanks, Clark. Great to be with you and all of my friends at CAZ today. OrbiMed is, we believe, the largest investment firm dedicated to life sciences globally, with about 17 billion in assets under management and 140 professionals worldwide. We're pursuing exciting growth and innovation across every stage of company in healthcare and around the globe. Our team's based in about a dozen locations, including several in the US, Europe, India, China, wherever there's anything exciting going on in healthcare. I think uniquely, we're investing at every stage from venture capital startups all the way through growth equity into the public markets. We start 3 or 4 companies typically per year ourselves. And we really like to get into the weeds. Our team has close to 40 PhDs or MDs that are tasked with really identifying the key breakthroughs and disruptive technologies that are going to drive biotechnology, medical devices, and diagnostics. And we love to roll up our sleeves and help build the companies. So we provide capital, but our team includes about 15 people who founded a healthcare company or served as CEO of one. So we join the board, sometimes take active management roles where we can, and love to really help these companies grow up and be successful.
That's super helpful. Thank you, Carter. As you know, our firms have been investing together for close to 2 decades now. And as you know, we always start with the downside discussion first, because we believe if we can live with that true worst case scenario, typically the upside will take care of itself. With that in mind, what in your opinion is that true kind of worst case scenario for healthcare and your approach, given you guys do participate across stage, geography, et cetera?
Sure. Just at a high level, I think healthcare has some downside protection, both at the industry level, and then when you peel back the onion a bit more at the product and company level. Starting at the highest level, at the industry level, healthcare has some pretty powerful growth drivers. So we've all heard about aging demographics. As people get older, they spend more on healthcare. That drives demand. Rising middle-class spending power. As people get wealthier, there's not a lot more they care about than better healthcare. And also innovation, a key breakthrough, big success for patients, and also, a nice success for industry. So all of those drivers, both demand and supply drivers, tend to put a floor underneath what can go wrong in healthcare. And then at the product level, a lot of the key products in healthcare also have some very favorable characteristics that reduce risk. Just to take one example, pharmaceuticals, drugs, for example, typically have a patent protection that will last up to 20 years, gives them essentially a legal monopoly so that the innovator who spent all that money developing the drug can recoup their investment. But also those drugs tend to have high margins, very high gross margins, and they're not cyclical products. Of course, the economy goes through up and down cycles, but healthcare products tend to be kind of steady as she goes and very stable in terms of demand. So we think within healthcare, when you're thinking about the downside, there's a couple layers of protection, both at the sector level and the product or company level.
That's super helpful. And in your opinion, what would you say is the biggest challenge or the headwind facing healthcare as an industry right now?
Sure, costs are always a big area of debate. As consumers of healthcare, we all feel that out of our pocket. And the US does spend about 18% of its GDP on healthcare. That's a lot. But, the silver lining to that cloud is that the US also leads the world in discovering new healthcare innovations. So, we don't want to kill the sort of golden goose that's delivering cures for us, but we also know that we can't pay an infinite amount for that innovation. So there is a fair debate and attention about costs and what society should be paying for them. It looks like we may have reached a compromise on this, because for the first time, the US government has been empowered to negotiate drug prices through a provision in the Inflation Reduction Act. So that's going to be kicking in likely over the next 6, 7 years. More drugs should be added to that list. And that may be the middle ground compromise that people wanted to see in terms of controlling costs.
Sure, that's helpful. And you mentioned that 18% number on healthcare. Out of curiosity, is that relatively static, or how dynamic is that number cross cycle, or maybe depending on who's in office?
Sure, it's extremely stable. It has been growing over time, which wouldn't surprise you, and might continue to grow a bit based on factors like demographics that we said. But it is very stable and does not move around. Interestingly, though, we do lead the world in spending more of our GDP on healthcare, and as other countries get wealthier, they're catching up to that number, or at least getting into double digits, and that's a powerful growth driver for healthcare.
Yeah, I'm thinking of political regime, et cetera. You guys touched on this briefly in your quarterly letter, but given we're entering an election cycle, healthcare, proposed changes, reform, which you touched on a little bit, always seem to be a bit of a hot topic, right? But given how messy and polarizing so many other issues are in the world right now, it doesn't seem to be a pressing issue. So do you see the election cycle creating any unforeseen challenges or unknowns that aren't front and center yet?
Yeah, it's a great question, and election cycles can always be a bit unpredictable. And we've seen in prior election cycles that voters will often identify healthcare costs or drug costs as a key issue, and politicians respond to that. So we've seen, for instance, the Affordable Care Act that was put into place under President Obama, or even all the way back into the healthcare reform effort that Hillary Clinton led when President Clinton was in the White House. It's created volatility, it's created a sentiment overhang, and so election cycles can be bad for healthcare. Interestingly, in this round, voters are not identifying healthcare as a key concern. That might be for a couple reasons. One, they're bigger, more pressing issues. They're thinking about things like immigration and the border. Or two, maybe some people are aware that for the first time, the government has been empowered to negotiate prices. We've kind of checked that box, and let's see how that plays out, and let's see if that addresses the cost concerns.
Sure, sure. So let's pivot maybe to more of the optimistic lens. And clearly, you guys obviously believe in the theme, as do we. But what would you identify as kind of the major, the largest tailwind or tailwinds now?
Sure. So yeah, that's more exciting to talk about. Thank you. I'd say there are a number of big tailwinds in healthcare. We kind of talked at the industry level, aging demographics, rising global incomes, innovation. Maybe just to dig into those a bit more, people over 65 tend to spend about 4 to 5 times more on healthcare than people in their 20s. And in most wealthy countries, that 65 and older cohort is rapidly expanding. So just for instance, to pick on China and India, by the end of this decade, there will be over 400 million people over the age of 65 just in those two countries. That number is bigger than the entire US population. So as these cohorts age into the 65 and up, healthcare demand is going to increase significantly. Also, rising incomes. We talked about the US spending 18% of GDP on healthcare. Well, in countries like China and India, it's more like 5%. Even some European countries only spend 8 or 10%. And as wealth increases, people care more about better healthcare than just about anything. So we'll see rising middle class incomes also driving healthcare. But the most exciting tailwind is innovation. We're investing in companies that try to treat and cure diseases. And when those companies succeed, diseases get cured, patients win, and also, typically investors win. We win and our investors win. Now, the US FDA approved over 70 new therapies last year of all different kinds. So that includes typical so-called small molecule drugs, but also antibodies, vaccines, gene therapies, cell therapies, and so on. So innovation is really what creates new markets overnight, creates really exciting opportunities for investors, and it is running hot in the US.
Yeah, so you mentioned three big tailwinds there, and obviously innovation kind of leading the way across those three. But is there one thing in particular within innovation that you think would maybe really surprise people to the upside?
Yeah, absolutely. And everybody's reading about it. I think our audience has probably heard about the GLP-1 drugs for diabetes and obesity, like Wegovy or Ozempic or Mounjaro. Obesity is a challenging global epidemic. There are over 2.6 billion people currently classified as obese, and that number is headed to potentially over 4 billion over the next decade. So it is a huge number of people who have not been given sufficient therapies and treatments to help. And these GLP-1 drugs appear to be a very powerful solution. People on these drugs in clinical trials have lost upwards of 20% of their body mass. They regain control of their blood sugar levels. The risk of a heart attack or stroke or cardiovascular risk can be cut by up to 20%. So all of these are really life-saving interventions. And we're so excited to see the really rapid uptake of these drugs. Beyond that, there's second and third order benefits. So there are conditions like sleep apnea, for instance, that can come from being overweight that also could be treated by these drugs. And so we're very excited about what we see today, but looking ahead for this category of drugs, we're going to see more combination therapies. We're also going to see options to just take an oral pill instead of the current drugs, which are largely injectables. So I do think in terms of upside surprises, these drugs will really surprise people. And just by the end of this decade, you'll probably see over 100 billion per year in sales of GLP-1 drugs. That's going to be exciting to watch.
Massive numbers, certainly. If you were to look at it, say, put it on a scale of 1 to 7, with 7 being the best, 1 being the worst, how would you rate the current kind of risk reward environment for healthcare, just more broadly speaking? And if you want, feel free to break out how these may differ across stage or geography, if the sentiment is meaningfully different.
Sure. I want to say 7, but let's not get careful. Let's go with
Fair
6.
enough.
And the reason is really two things. The valuations in the innovative areas of healthcare, like biotech, are just about at record lows, while the innovation of new cures is at record highs, as I mentioned, with over
Interesting.
70 therapies approved by FDA. That is a very rare combination. Usually, when you're seeing the innovation engine run hot, we're in a bull market, we've got big valuations, but we're not. We're actually really sort of beaten down, and people may know that the biotechnology sector peaked all the way back in February of 2021, and actually, by some measures, declined as much as 50 or 60%, depending on the index that you're looking at. And so it's not unusual actually to find a biotech company trading at a market cap below its net cash. There are over
Wow.
100 biotechs trading below net cash. So we still have kind of this bear market, dislocated set of valuations. Meanwhile, all these new drugs are hitting the market and driving new product launch, revenue growth, M&A activity. And so it's a very unusual time where you can get great innovation at a cheap price.
Interesting metrics, certainly. What do you think people are getting wrong or not fully appreciating enough about the space right now?
Sure. I mean, one thing that just happens is you sort of forget where we came from. And I think a lot of people forget all the incredible advances that we've had in treating and curing disease over time because, fortunately, we've checked that box and we kind of moved on. But, one really big one, for example, is just deaths from cardiovascular disease. If you go back to before, modern standards of care, like in 1950, for example, about 500 people per 100,000 died per year from cardiovascular disease, so heart attack, stroke, and so on. That number has been cut almost 80%. So now maybe it's more like 130 per 100,000. And that's thanks, for instance, to drugs like statins, Crestor, Lipitor, that many people are probably on. Just so powerful and have led to such a reduction in cardiovascular deaths, and that's great. And so maybe we lose sight of that sometimes. Those drugs go to generic, they become very cheap, and we don't really think about them as much. And there's so many of these examples. Hepatitis C, for example, there's over a 90% cure rate with modern drugs, thanks to treatments from companies like Gilead, which is an incredible company, and others. So hepatitis C is on the way out in the US. And so I think it's easy to lose sight of all that progress.
Yeah, the dichotomy between metrics is always interesting because you speak about obesity rates and then talk about the reduction in heart disease as well. It doesn't feel like the two should occupy the same space, but nonetheless, here we are. So it's always interesting to rethink how we as a society feel about certain stereotypes and then how that sentiment changes once we actually put real numbers or metrics to it. As we close here, lastly, please just maybe make the case for us why you believe your strategy or theme to be maybe a better alternative than, say, traditional asset classes, and maybe not necessarily just better, but maybe complementary to traditional asset classes.
Sure, absolutely. So we're chasing innovation wherever we can find it. And the most exciting innovation is often occurring in smaller companies, private companies, venture stage, growth stage. So the only way to access that type of opportunities, typically through venture capital funds, growth equity funds, and so on. Most of the large cap public healthcare companies are growing relatively slowly, and they rely on smaller companies for innovation. You see a lot of acquisitions and partnerships where the big companies will either buy or partner with the small companies because they want access to that higher pace of innovation. So that's a signal. The exciting breakthroughs often come from the smaller guys. And as an investor, if you want to participate there, you probably want to find some kind of alternative, at least to complement, if not replace, as you said, a more traditional exposure to large cap pharma. So as a firm, we focus a lot of our attention and we raise funds focused on those small private companies that really drive innovation.
Yeah, and I think that phenomenon is not only unique to healthcare, right? Because M&A appears to be the new R&D, right? It's just a faster pace of acceleration, certainly. So, Carter, thank you so much for your time. Always insightful, and we appreciate you being with us. And thank everyone for joining us for our third Thursday Themes with Carter Neild from OrbiMed, and we look forward to you joining us again next month.
Thanks so much.